Good morning. It is Friday, September 27th, and today it's Wall Street Beats Fun Shirt Friday. I'm Nadine Turman. We have Robert Marson, Paul Meeks, Russell Young, Charlie Peabody with us today. And we're going to be kicking it off with Robert, talking about an energy-related name. What do you have for us today?
Well, as you know, the formula says to buy when they drop a lot to low and compelling valuations without an implosion in the fundamentals. So far, the oil service fits that particular set of parameters. Now, oil has dropped a lot. Natural gas has recovered quite a bit lately, which is positive. But there's this fear that oil is going to go to zero again, and the entire world's going to stop drilling, and I don't think that's the case. So Weatherford International hit my buy screen recently. It had dropped from a peak this year of 135 down to 84. At 84, I initiated a starter position. I have never analyzed the company before in my entire 42 years.
Okay, thank you for that caveat. Yeah.
So I'm just getting up to speed on the business. But what it looks like to me is in 2014, they were a buy everything, cook the books kind of hamburger helper, GE style, Jack Welch style management company in the old days, and which means fraud. Okay, that's what I'm saying
Okay.
when I say that. If you don't understand,
Well, cook the books. Hopefully people get that, but thank you for clarifying.
GE cooked the books for a decade under Jack Welch. Anyway, the stock got, the company peaked in sales, I think, in 2015 around 2014 around 15 billion. They went into bankruptcy in I think around emergent bankruptcy in 2019. Brought a new CEO, cleaned up the balance sheet, sold off and closed businesses. And apparently, from my looking at things, they kept the highest IP, highest moat, highest technological rich businesses in the oil field service business that they had in their portfolio. So today they do 35% gross margins, and that compares to low mid 20s for Schlumberger and Halliburton, which people think is the two class acts in the industry. So I think they have some decent IP. They're now only about a $5 to $6 billion business instead of 15, but there's very little debt, and the stock upon its correction has declined from a fair value to a compellingly cheap value at about 4.5 times EBITDA and about 9 to 10 times earnings and 1 time sales. Again, we're in a 3 times sales market, and I just think the business is too cheap. It does require a stabilization, if not a rally. I think a modest recovery in oil prices. If there's a collapse in oil prices, the entire sector will follow the commodity lower. But this collection of businesses seems to be taking market share, seems to be doing extremely well because it's long-lived deepwater, large project work they do that's not going to be taken off the books. That's U.S. shale land drilling business. That's the swing business in the U.S. They have, I think, less than 10% of the revenues are that type of business right now.
Mm-hmm.
So this stock could easily recover the 52-week high in a year or so if oil recovers back to, say, 75 to 80, in my opinion.
I was just putting stock to stock like a Halliburton versus, and the ticker is WFRD for those following along. And it just seems like its fall from the June, July period is even more dramatic than peers. So is it just more sensitive to oil prices, or what's going on with that?
No, I have an aha for that. See,
Thank you. Good. So you didn't even have that was going to be my question. So I'm glad you're
I,
ready.
I used this phrase when I was circling, and unfortunately only circling PAL Industries, if you
Okay.
remember. So any stock that goes from 20 to 200 has the potential to experience what I defined as a profit-taking panic. Okay, and there's so little volume and underneath the stock that once you
Okay.
get a negative price momentum and a bad chart, people sell because other people are selling, right?
Okay.
So if a stock has a steady climb over time, you don't get this profit panic because there is no profit that the guy that bought at 20, 30, 40 is selling at 80 because he's seeing the stock drop $50 and he's saying, shit, I'm going to save my triple. I'm getting stopped out. I don't know what
Yeah.
the stock market knows that I don't,
Yeah.
but I'm getting out. So Halliburton and Schlumberger, they don't have that.
Right.
They're the
Right.
same
Well, obviously they're huge.
they're
Right.
the same price they were 10 years ago, 5 years ago, So you don't have a profit taking panic that could drive the stock to even more compelling valuations. And PAL Industries went from 200 to 130, and I had set 120. I had set my heart on about par, and it didn't, and now it's back over 200. So it's in a much better area than Weatherford.
Okay.
But the concept is both stocks had been almost 5 to 10 baggers in a couple of years. They have a lot of the fundamental change to justify and drive that price. Action occurs, and then you just have to assume it's analyze that it's sustainable. So I think Weatherford's margins and business fundamentals are sustainable because they're only back to where their peers are, in my opinion. Weatherford thinks they have a few hundred basis points of EBITDA margin expansion in the next couple of years ahead of them. So
Okay,
they're
great. Well, we'll be coming back to you on that one. I think it's a super interesting name, so I'm going to take a look as well. So now we're going to go into a different sector. We're going to tech roundup with Paul, and some of these names and some of the points you're making, I was writing in my arrows this morning. So want to walk us through it. I know Russell's going to come too on this, and he's going to be touching on China, which is another fun note that I put out this morning. Man, I mean, it's all about China overnight. But Paul, what have you got for us on Micron and some OpenAI and some of these other names?
Well, first of all, my apologies for missing the memo on the crazy shirt day.
Maybe you could put a button down like one below, and that'll be like your fun shirt Friday. That's like your dangerous
I look
move.
like a preppy dude from 1987, which I probably am. So I posted a note this morning. I think Russell will probably have comments too. I just wanted everybody to know that yesterday, since I didn't appear on the program, I posted that note about my feelings of Micron post their own quarterly report. So look for that. It also looks like it was posted by Wall Street Beats on social media. So anyway, look for that if you care. My bottom line is,
We
even though
care. We care, Paul. We care.
uh,
Everything you do.
my bottom line is, even though I've held it for years, I did buy a tad at 89 a couple days ago, but I was also the big idiot that earlier in 2024 bought some at 140. So
And
I'm
let's talk
in.
about that before you go to other names, right? Because I think what I appreciate is you saying that, right? It's like not that just that you bought before the quarter, you thought it was going to be good, but
Yeah.
what do you think that you got wrong on either timing or otherwise, um, that kind of looking back, you either would have done differently or just in hindsight, what you know now?
Yeah, I think I was correct with what I think is going to be the most important aspect of the business is the high bandwidth memory, but
Okay.
was incorrect with the weakness in the rest of it. And
Okay.
even as my high bandwidth memory business continues to grow, it probably should be 15 to 20% of total revenues next year. We do
Hmm.
have 80%, which
Yeah.
hadn't been in that great a shape. So
Got
my
it.
average cost all in for the 2024 purchases is about 104, 105. So luckily, I finally got into the good side of the ledger. So look
Good.
for that. Next one I had in my tech smorgasbord is I have been out of super micro ever since I got a whiff pre-market that they were delaying their 10K. Right?
Uh-huh.
I don't care how much you once liked the stock, how well you once did with the stock. Accounting fraud is accounting fraud. But I'm starting to think if and when they come clean, who knows what that's going to be, and we don't know what the revelations would be. Some of them could be sinister, and I don't know. Maybe there's a small chance that somebody goes to the big house. That is jail, you guys.
Yeah. So what are you saying then? So like, are you just watching it or what are you doing with this?
I'm watching it. I'm wondering if, with all the bad news already out and all the worst case scenarios spinning in people's heads, about a week ago, the stock got down to 386. Might be interesting. We've seen Dell, which is my favorite play right now. I know Russell likes HPE. but they're both talking about, which was the theme not too long ago before the financial accounting revelations,
Okay.
liquid cooled servers. That was the go-to for SMCI. So I don't know if they can get through this. I'm not going to do anything, before we get the revelations and see, what they have to do for restating prior year's earnings. But
Mhm.
anyway, I'm kind of intrigued, and maybe at the end of the day, the 386 is the low. We'll see.
And I
Don't
think
have
it
the
comes down to
ball, but I
style
don't
of
think we'll.
investing, Paul. So some people would say, a management team who either didn't have the controls to figure things out or cooking books or whatever it is, they won't touch, right? So some
Yeah.
people think that. And then other types of traders or investors will say, well, when things get thrown out so much, I'm just here to make money, not really think about the quality of management team, and I'm seeing this maybe oversold. So how do you weigh those two things in your style?
Well, with my style, I quite often buy bad news. I try to be a contrarian, but in this case, with a financial accounting fraud, I don't think you can do anything ahead of that final announcement. But I'm just trying to get people to prepare for that. Start
Right,
thinking about
mentally
it.
mentally think about that. Okay.
My smarter buddy Russell Young, he might have some thoughts. Um,
Actually, Russell, do you want to come in on that, and then we'll come back to Paul
Sure.
for OpenAI,
yeah,
Intel, and Meta. It's kind of fun to do that,
so,
right? You mind, Paul?
Yeah.
Switch
but
it up
No,
a little bit
I
here. Get crazy
yeah,
on a
no, on
Friday.
super micro. So I mean, I had been a fan, and I flipped from long to being short. And then yesterday on the news, I wrote some puts against my short position. Think basically saying I think the near term hit is in, but I'm
yeah,
long term still bearish on it. So the volatility was way up. So puts were very expensive. So I just sold puts against it. Right.
Hmm.
So my concern ultimately on super micro is the sustainability of the margins. Foxconn has entered the AI server business, and they're saying that if they buy the NVIDIA GPUs and resell them to customers, embed in the servers, that it's going to bring down their gross margin to below 6%, right? Because right now, the business operates in one or two ways. Like Microsoft can buy the GPUs and just have a Jabil build the servers for them, or even have Foxconn build it for them. So my concern is just Supermicro saying their margins are going back, their gross margins are going back to 12%,
Right.
is impossible when they say they want to be a huge share of the liquid cooled hyperscaler business. If they were staying in their traditional market of small one-off customer wins, then those margins might be sustainable. But going after the hyperscalers, they won't be able to hold a 12% margin. So I look at it and you say earnings can come down a lot, and so the earnings are unsustainable. In terms of the accounting problems, we know, like in their last 10K, they had an auditor, a qualified opinion about how they're recognizing inventory and cost of goods sold calculations, right? So the auditor had expressed concern that were they properly taking reserves, and so that's what we don't know. I mean, this is just a probe by the
Right.
DOJ, which just means this isn't an investigation, so we don't know what's going to come of it. A probe might turn out to be nothing.
Right.
So I'm just longer term concerned about the margins. As NVIDIA is pushing GPUs to everyone, Supermicro benefited from being early, but now, Foxconn is bigger than Supermicro in AI servers. So that's my
Okay.
concern.
Okay. Well, thank you. So now I'm going to come back to Paul. Paul, I know you have a few more names you want to talk about here.
yeah. So anyway, that's why I call Russell Young the smarter dude.
Wish.
I concur. OpenAI, I think, is very interesting. Obviously, a privately held company, but it's being purportedly valued at $150 billion, which is massive. But I think this transition from a nonprofit entity to a profit seeking entity, which they need to raise huge sums of capital,
Sure.
is going to shake some things up. We saw that the chief technology officer left.
Right.
And there are other executives that have left and probably will leave. And people think, oh, it's just some Sam Altman OpenAI drama. I don't know, man. You got a 49% shareholder in Microsoft, and the implications of what goes on in that company, whether it be a soap opera or not, reach pretty broad in our sector. So stay tuned. I think it's
Got it.
very interesting. Intel, I want to tell you a funny story. Um, I got like a threatening message. I don't know how the guy found my phone number
When?
when I appeared on CNBC, bad mouthing Intel. Pretty vicious stuff. But anyway, I
A
have a bet.
shareholder, employee? Did you know who it was or no? Was it like a unknown number?
Unknown number, and I haven't been hated this much since I was managing the big
Uh-oh.
team and the internet bubble blew up. But I'll tell you this: I have a bet on Intel with another professor here at the Citadel, who's also an ex-Wall Street guy, so he follows the markets. And we have a bet that I say that Intel will go to 20, and he says it's going to go to 30 first. So
Okay.
anyway, that's a bet. I'm on the min range, and I will tell you the only chance in hell I think that would happen is if somebody is dumb enough, Qualcomm, Apollo, whomever, to buy this goddamn thing. So anyway, I might get proven wrong only because of some hubris, and people think that they can take over this once American icon. And then the last thing I just want to
news,
mention.
before we go to the next one though, Paul, the news that the government and the companies finalizing an $8.5 billion chips funding package by year end. That matter to you or no?
It does, but the problem with this company is it's the manufacturing gang that can't shoot straight, and so I don't know if the feds are doing the right thing by giving them money, but we'll see. We'll see.
But it doesn't change your view that this thing's going down. That's what you're saying.
Yeah, I'm a little bit worried. And then the last thing I just wanted to say is Meta and Nvidia are my
shaking my head, Paul.
Yeah, are my top.
I remember, Paul, the glass holes walking around Palo Alto. So please give us the bull case of why these glasses are cool. Like, I'm looking at the pictures of Zuck in them.
Yeah.
Do we need those? Are we wearing these? Please help me understand.
Yeah. So, I'm looking for some traction in the non-digital advertising business, which is solid. Reality Labs, where all these things are housed, lost $4.5 billion last quarter, and some people were relieved it wasn't worse. So whether it's the glasses, which actually are gaining some traction, I was surprised too to see the detail, but also their approach to AI, which is an open architecture versus everybody else that is trying to set up a walled garden. I think it's going to continue to propel Meta forward. I like how they're attacking this. And you think about it, if Reality Labs ever starts to bleed less and some really interesting things coming out, which I think there already are, by the way, think about the first quarter of 2015, when the first time ever Amazon broke out Amazon Web Services. And then after that was all she wrote, right? Because Amazon Web Services was growing fast at a higher margin than the e-commerce business. Could be another catalyst. And I see that as a reason to not sell the stock, even though it's at an all-time.
Yeah. All right, the dream's alive with Paul and Meta. So all right, I'm willing to be convinced over time with this. That's all I'm saying. But you have a skeptic here with me, at least on those glasses. So Russell, I know you're going to overlap on some names and give us and some new names in China. Walk us through what you're thinking about today.
No, I agree with Paul on Intel. Clearly, Gesker's in trouble. And when they're talking about breaking up the company, right, his strategy is failing. And then Meta, I think Zuck is, he's a new innovator in this stuff. And people are skeptical, but he's doing some really interesting stuff. And moving to open source is very, very powerful. We talked about Supermicro already, but Paul was talking about OpenAI, and last night I had a call with Microsoft Contact, and it strengthened my conviction about Applied Opto and Fabrinet, is that there's this big attitude on Wall Street that Ethernet is going to take over and kill NVLink. And what he was saying is you move to the higher speeds, that NVLink is just inherently faster, and Ethernet won't really catch up. And he said for the hyperscalers, Ethernet's really dead, which is very contrary to a lot of opinions. Fabrinet announced that they are adding a new factory that'll be twice the capacity of their existing. And what they're doing is they're moving, they're a main supplier for NVIDIA for NVLink. And NVIDIA now is moving to silicon photonics, where they're going to start putting some of that connectivity onto the chip of the board. And so higher speeds are just necessary, and this optical boom is going to keep on continuing. So I'm still super bullish on Fabrinet and Applied Opto. There's Applied Opto has been a basket case and it's been hard to execute, but right now management went around and has talked to investors. And there's this perception on Wall Street that Applied Opto, that the Microsoft deal isn't real, that they're just using them as a backup. But my source was saying that's not the case. Applied Opto is a main supplier, and they need the capacity. It's just that they're super tight, and they're very concerned about anyone who has reliance on China to get these parts. And Applied Opto is all in the United States. That's AAOI, and so they're super excited about the product ramp. And what's really crazy is when Microsoft talks about OpenAI, I mean, they are crazy excited. I was asking him, well, when does ChatGPT come out? And he's like, we know the date, but we can't tell you. So it's going to be soon. And I think it's going to really amaze people on how powerful it is. There's a whole host of critics out there that say, oh, it'll be showing declining returns and this stuff isn't going to scale. But he was saying the opposite, that the work applications and the speed of natural language processing is going to be huge. So I think that's our next catalyst to watch is ChatGPT 5. But I'm super bullish on Ethernet. And he was also saying in these data centers, you still need faster storage. That spinning disks aren't going to cut it anymore. It's all moving to flash. And I've been long the pure storage along those lines. But everything is speeding up. And that trend is going to continue. And he also mentioned that power is still a huge constraint. These hyperscalers are going across the country, grabbing whatever power they can get. And power is still tight, which has been positive for a lot of the big utilities as well. And then lastly, everyone's super excited about China. And I get it, the stocks are cheap and they're rallying. But, what people haven't talked about is China doesn't like capitalists, and they're discouraging their top employees from going to these tech companies, right? And so everyone's excited about the stimulus, but it's still a very much an anti-capitalist country. And I have trouble getting behind this rally in these stocks until China will really start to pivot and encourage their youth to go into tech and into these companies instead of going to the Communist Party. So I think that's, to me, is the biggest disconnect. Is this anti-capitalist attitude with the stock going up.
Aren't there ways to play China that aren't domestic? I mean, China imports a lot of resources. Aren't there other ways to play China other than just domestic companies?
No, yes, I'm just saying in terms of you look at Appaloosa is getting a lot of attention, right? And he's talking his book and he's piled into the big Chinese tech companies, right? That's the way the U.S. investors are playing it. But we saw the industrial production number was down 18%, right? And so the country and the bonds are suggesting they're going into a deflationary spiral. So they're stimulating. They have too much construction, so it's going to be very interesting to see how this plays out. The luxury stocks are rallying as assuming that consumption's come ripping back, but I don't know. I'm not chasing the rally.
Charlie, I think, so our team does play in China, not just in tech, but, they import soy sauce from Japan. They import, as you're talking about, materials. They have milk imports, powdered milk and other things from Australia. So I think that if you think broadly, depending on what the government does, especially if they put money into the hands of the lower end consumers, not just, not the higher end consumers, there certainly are ways that might be more sustainable. The question, I think, maybe, and I don't want to put words in your mouth, Russell, is this, all these things at one time, plus the short squeeze with the Shanghai trading issue, is that sustainable from maybe the things that have popped in the last week? That's a different question. But when you do put money into people's hands, you make it easier to buy things. You do find that you can see that consumption raise relative to who you're giving the money to. So that's the only nuance I think I would put in there from what Russell said is sure, if people are thinking do you buy Tencent or not, or Meituan or whatever or not, That's one thing, but there's certainly a lot of other types of businesses, at least my team looks at, that you can consider.
Yeah, but we also know that when you give money to Americans, they spend it. And then, but the question is, if your outlook in China is pretty dismal, if you're giving money, will you spend it or will you save it because you're concerned you don't
Yeah.
have a job? And so
Yeah, they
that's going to
have
be
been
the question.
saving it,
And
and that's what we've seen. Yeah, they have been
right.
like most people have been saving because they're concerned about where the what the government is doing and where the
Right.
economy is going to go.
Right. I'd be much more bullish if we saw, fundamental reforms around encouraging people to take good jobs and not go work for the Chinese party. So we'll see. It's super
I think a
interesting.
little bit has to do with positioning too. About 2 weeks ago, it was at the 1% level, so everybody was not in China. I think the latest numbers, it's into the mid-teens, but it's still on a historical basis. Most international mutual funds and institutional investors are way, way underweight. So one of the issues is if the benchmark does go up, some people are forced to play, right? Because you can't underperform if that part of EM is ripping. So whether you like a company or not, sometimes a certain part of our peers have to play, including me. Relative, luckily, we were in things, but we do have to be worried about if you're playing against a benchmark, right? It's like it's part of the gig, even if you like or don't like or believe in an economy. You do have to decide when something has been thrown out so far that it could have that rip in your face, and then.
For sure.
But that's different than what you're saying. Is like, do you really want to own a country or companies where they're not being incented to be investing their time into them?
I got a question about stock for Russell.
Oh,
You what?
really? Where you go? What do you
Yeah,
got?
how about that? Let's talk about a stock. Russell, AAOI, do they have a second customer other than Microsoft? Real customer.
Yeah, Comcast is huge with them. I mean, right now there is a huge cable upgrade going on,
Cable.
and they have two components, right? They have a data center business, and they have
I don't care about the cable business. I meant data center.
yeah, they have announced that they have three more hyperscalers on deck. That they have
Uh-huh.
so they're talking that they're going to be into all the hyperscalers. But you really should care about the cable business because they're sole supplier there, and the margins are much higher. So you can
Yeah.
just miss cable, but there's about ready to go through a major upgrade cycle.
I
So
thought they've done that. I thought that's in progress. No.
no, it's just starting. The cable, the
Starting.
numbers, the numbers in cable have been terrible, and they're guiding to them inflecting like right now. So
My
those-
mistake.
Yeah.
Yeah, my mistake.
Yeah, no worries. It's it's
They've
perceived as a garbage
they've
stock,
always-
right?
I've owned the stock off and on for a decade. They've always had one big customer, and whether it was Facebook or Microsoft, and then all the other guys were coming on board, but they never did. As you know, they've been very challenged at execution for a decade now.
For sure.
All right,
But
I'm gonna move over though. I want to be cognizant of time. I want to get Charlie in here. Charlie, with your pineapple shirt, appreciate that on a Friday. Very, very festive.
Good.
Doesn't he look good today?
Just a welcome pineapple.
Juicy on the inside. So, what do you have for us today, Charlie?
Dean, I want you to ask Paul just to reallocate 1% of his tech stocks over to Citigroup because we could take
Okay,
it
okay.
from $60 to $500. It's only an $118 billion market cap. Anyway, so I wanted to reiterate my buy on Citigroup because I like the setup here. So let me just review what's gone on. I mean, the low was November of 23. It had a steady climb into July. And then since July, Citigroup stock has been, in correction, sort of sideways up and down. And I think there are two main things for that, short-term correction. One has been the change in the judicial system in Mexico, and that's important because it's reduced investor appetite for Mexican securities. And the reason that that's important to Citigroup is they're next year targeting an IPO of their Banamex consumer banking franchise in Mexico. It's not targeted until the fourth quarter of next year, but whatever it was worth, and we think it's worth somewhere between 7 and 10 billion. Whatever it was worth, prior to this, it's probably worth something less. So that's going to impact, people's impression of what their capital adequacies or excess capital is going to be coming out of that. We'll see what happens over the next 12 months because there's nothing in the interim that short term that's going to be done there. And then the second is, they've sort of signaled at a banking conference in early September that they would have a weak revenue quarter. So Citi will probably have one of the weaker quarters of the big banks. They report on the 11th of October. So I think this thing could sell off going into that, but I would buy that weakness. And on the revenue front, the two areas, they've been signaling a weaker net interest income, top line revenue growth. And then they've been signaling weaker trading because they're big in the fixed income trading business. No one pays for trading. And I would point out on the capital markets front, their investment banking is actually going to be one of the strongest of any of the major banks. And people do pay up for investment banking. So I think the setup is good. They're building businesses. They just did an affiliation with Apollo. They are consolidating the American Airlines credit card operation. Andy Sieg is building out the wealth management operation. Andy Sieg built, the raging bull at Merrill Lynch. So I think, this stock is trading at 7 times next year's earnings. The average bank trades at 11 times. It's trading at, a 70% of tangible book value, which is around 89. So I think, they're going to do, somewhere in 26, 27, a 10 or 11% ROTCE. So I think you can be looking at a $90 to $100 stock at the end of 26.
And I know you were also talking about shorts like Goldman, maybe regional banks. So where are you on the timing of that and levels? At what point should people be considering that?
Well, I am short regional banks. I'm short the KRE and I'm short Goldman. So I think Goldman is going to have a very disappointing third and fourth quarter. I think people are going to come to realize that there's a greater cyclicality to that revenue stream than they're let on. In terms of the KRE, net interest income is the key there. And I think net interest income is going to continue to be ratcheted down as it already has been coming into the quarter.
Okay. Well, thank you. Well, that's it for us. It's Friday, September 27th, and we will catch you back on the last day of the month and the quarter on Monday on the 30th. Thank you so much for watching.
Well done, Nadine.
Nice job, Nadine.
All right.
Here we go.
Good weekend, all.